Okay, welcome back to another update video for my rental property purchase out there in St. Louis. This isn't necessarily an update where we're moving along in the process, but I'm just going to get right into it. For this video, I wanted to actually break down all of the costs associated with my loan, my DSCR loan that I'm going to be using for this rental property. So I'm going to be breaking down line by line off of this worksheet that my lender sent me, and then hopefully you guys can learn something. I learned a couple things after talking with my lender, so I'm just going to get right into it. So I have it right here on my phone, and then as I go through each line, I will put on a screenshot for you guys to see, just to see exactly what I'm reading off of. But basically, I spoke with my lender and asked them for a loan estimate, which when I was working as a loan officer, a loan estimate is something that you would give clients that basically gives an entire breakdown of closing costs, down payment, taxes, insurance, exactly how much the client is going to have to pay once we actually get to closing. So I actually learned from my lender that with DSCR loans, because it is technically a commercial loan product, they don't actually have official loan estimates, but they do have fee worksheets. So because I used to work in mortgages and selling them, I knew what to ask for and knew what kind of questions to give to try to figure things out. So these, just to be upfront, may not necessarily be my exact closing costs, but because I know that everything is in at this point, I know my taxes, I know my insurance, we know how much title and everything is going to cost. This cost in total is going to be very close to what I'm going to actually have to end up paying in wiring to the title company once we get to the closing table. So I'm just going to go through it. We'll just get right into it. So for the very first screenshot, I'll throw on the screen. Just going to show the very top part of the worksheet. The property value, $110,000. You guys can see there the purchase for loan purpose is going to be a purchase. My down payment, 20% down, is going to be $22,000, and that's going to be based off of the property value. So my loan amount when everything is said and done is going to be $88,000, and I am at a 7.5% interest rate. So that may seem very high, but when we're talking about loan amounts that are less than $100,000 in the grand scheme of things, and I'll explain it in a little bit, this isn't very much. 7.5%, it could have been 8%, really wouldn't have made that much of a difference. Moving down to the next line, origination charges. So this is the loan origination fee. After speaking with my lender, they charge a flat they charge a flat 2.75% based on the loan amount. So if you were to take 2.75% and times it by 88,000, that is where this origination charge is coming from. With the DSCR loan, because it is a commercial loan, you're just going to have to pay that. It's not something that you can really avoid. My lender did let me know that if I were to buy again and use him, that would actually go down to be 2% instead of 2.75%, but it's basically the cost to play the game. So that's $2,400. I was expecting that. That's not something that was unexpected, and that's going to be pretty standard for any lender that's giving you a DSCR loan. Moving on to the next section, services the borrower cannot shop for. So this includes the credit report fee, the processing fee, and the underwriting and lender doc prep. So this is pretty standard as well. This basically is the cost that the lender passes on to. When I used to work in mortgages, we used to say that it's basically the cost to keep the lights on. It's basically what the lender charges to pay the loan officer, to pay the assistants, to prepare all the documents and everything like that. It may seem like a lot, $3,000. It is a lot, but at the end of the day, it's something that you're going to have to pay no matter what. So the loan origination fee, which we just spoke about, is what they charge to actually make their money and make their profit. The processing and underwriting fee is what they charge basically to pay everybody involved in the company, essentially. And then going down again to the next piece, services the borrower can shop for. So this is actually going to be all of the title company fees. So you guys can see there the certification fee, closing protection, endorsement fee, lender's title, policy premium, recording service fee. To be quite honest, these are just a bunch of fees that the title company charges. Not really any way to get around those, but that's $1,200. And then moving over to the next set of costs associated with my loan here, we have prepaids. So I have the county property taxes and hazard insurance. So for those that may not know, when you are purchasing a property, whether it's an investment property or a primary property, they have what they call as prepaids, where essentially you have to pay your taxes and insurance based on what time of the year you're actually purchasing the home. You have to pay a certain amount of that up front, and what the lender does is they actually keep that money, I want to say they keep it safe for you, but it's something that they pay up front so that you're basically always going to be ahead of your taxes and insurance, and you're never going to be able to fall behind on that. So once my first payment comes due, I will actually have already been paying into this pot, so to speak, and basically my taxes and insurance are always going to be paid, because the last thing you want to do is fall behind on your taxes and insurance, and then all of a sudden you're getting a lien that you weren't expecting put on your house. And so that's another $1,500. And then my initial escrow payment at closing estimated to be about $450. And that is just the taxes and insurance, just said in another different way. These are basically fees that I'm not going to be, nobody can avoid. You have to pay your taxes and insurance. It's part of the closing process. It's part of the loan process, and it's just something you have to pay. And that's going to differ based on what property you're buying, what the area that you're buying in. Your taxes could be higher, your insurance could be higher or lower, just depending on what kind of insurance company you're speaking with. So that is a fee that you're not going to be able to avoid, but it is something that can potentially be different just based on the property that you're buying. And then finally here is really just the bread and butter of everything, the total estimated funds that are needed to close. So this is really how much money out of pocket am I going to have to spend to acquire this property and actually make it mine. So based on all the things that we just spoke about, kind of breaking down the fees that I can and can't shop for, my taxes, insurance, origination fees, I'm going to be breaking it down right here in the total estimated funds to close. So this is going to be what I will actually have to end up wiring if this was my exact closing document right here. So the purchase price, $110,000. The estimated prepaid items is $2,003. So that would be the taxes and insurance that we spoke about added together. Estimated closing costs, $6,717. So that would be all of the very first things that we spoke about added together. So that would be the origination fee, the services I can't shop for, so processing and underwriting, and then the title. So that would be $6,717 added up. So then it says total due for borrower at closing, $118,000. And then past that, it actually talks about things that I got credit for. So I had to put $1,000 down as earnest money, basically to show my good faith to the seller of the property that I am serious about this and that I want to move forward with this purchase. So I put $1,000 of earnest money down, which is actually a credit to me. So I will actually get that money counted towards my closing costs at the very end of this. I also received a 2% seller concession. So for those that don't know, you can ask for seller concessions whenever you're purchasing a home, and it's something that the seller can either say yes or no to. I got a 2% seller concessions, so you guys can see there's seller credit for $2,200. That is actually a credit to me. That is basically free money to me that the seller is willing to essentially take out of their own profit to help me with my closing costs or whatever it may be. So that origination charge at the very beginning is basically paid for through these seller concessions, so that's not money I actually have to pay out of pocket. My loan amount there is $88,000, and then you guys can see their total paid already by or on behalf of the borrower at closing, $91,200. So it says at the very bottom there, total estimated funds from you is going to be $27,520. So that may seem like a lot. It's important to note that $22,000 of that is just my down payment. So that's not actually a cost that I'm going to lose. It just becomes equity in the home. So $22,000 of that is the down payment that I'm going to have to end up paying. Everything on top of that, so $5,520 if you just do the math quickly, is going to be what my true closing cost is going to be. So my taxes, insurance, fees, everything. So if this were my actual final locked in closing disclosure, basically I'd be sending $27,000, almost $28,000 to the title in order to get this deal done. So hopefully you guys enjoyed that. I just wanted to show exactly the breakdown of my loan for this property. And it's going to be very similar. Like I said, I used to work in mortgages, and so I understand that even though this fee worksheet isn't necessarily the final locked in numbers, it's going to be very close because we do have everything in at this point. So hopefully you guys enjoyed. Just wanted to make this update video to show that. If you guys have any questions, feel free to reach out and I will update you guys in my next video.